Very good afternoon to all of you. We have heard a lot about the rulings and so many discussions and the decisions which are coming about the unsettled positions under GST. What I'm going to touch upon in my session is that what are the key issues which we are facing on day-to-day basis when we are dealing with the department. So I'm not going to touch upon the routine matters like 2A, 2.3b and the general audit issues and routine inquiries. I'll touch upon 4 major issues which we are facing on day-to-day basis where various investigation authorities, the anti-evasion authorities, DGGI from various locations, they are raising a lot of disputes on certain matters. The first one is, if I begin with, where Puneet sir has stopped that there is a recent judgment where we have been allowed to take the transitional credit. I'm not going to touch upon what the merit of the case would be, whether it is allowed, not allowed. What I'm going to touch upon is that assuming that the transitional credit that you have taken has been questioned by the authorities for various reasons, the merits of the case are such that you're not able to prove. We are going to see that what are the powers which are available with the officers to recover this ineligible or so-called wrongly transition credit in my TranVen. First thing, do they have power to recover this ineligible credit from me under section 73-74? And not only that, about the credit amount, do they also have power to recover the interest on this wrongly transition credit? Now, when I look at Rule 121, it is enshrined with the provisions which give the officers the power to verify the transition credit and initiate the proceedings under 73 and 74, as the case may be, to recover the ineligible transition credit. When I go to section 73 and 74, there is a specific law that has been drafted. The language of the law is very clearly worded to say that it gives the power to the officers to determine the tax not paid, short paid, erroneously refunded, or input tax credit wrongly availed or utilized. When I go to the definition of input tax and input tax credit under the law, very specifically there are listed taxes that have to be covered under input tax credit. So if anyone in the audience can tell me that where do I fit in terms of this definition to say that any transition credit which was a pre-GST credit is being denied by the officer, falls under input tax credit. Does it fall, if anyone can give an answer? Yes, no, maybe? No, it doesn't. Your input tax credit definition is only talking about the taxes you paid under GST. Transition credit is the credit of the taxes that I had already paid in the pre-GST regime under SENVAT credit rules. It was eligible to me under CCR rules and has been transitioned during the transitional provisions. So, does this section really have the power, the section 73, which has been taken as a support under Rule 121, does it even have a power to recover this wrongly transition credit from me? More than that, if you see the language of Rule 121, they never say that you have to apply the proceedings of 73, 74 as may be applicable, mutatis mutandis, so and so forth, to recover these amount. It simply says that you have to initiate the proceeding. I'll take you back to the pre-GST regime. There was Rule 14 of CCR where there was any ineligible, wrongly availed credit where the recovery provisions were there. Clearly, it was worded in the Rule 14 that any ineligible credit can be recovered along with the interest, and the provisions of Excise Act, which were 11A, 11B, and Finance Act 73, 75, the proceedings under these acts may be followed mutatis mutandis to recover the amount. So strictly speaking, current position of the law doesn't borrow the rule. It just implies that you can initiate the proceeding under section 73 and 74. 73, 74 doesn't have power to recover any credit which is transition. So there is an argument which assessees can take in case, other than the arguments on merit, that this particular provision is not having enough power, and this is ultra vires the provisions of the recovery or the demand that has to be initiated under 73 and 74. And we have umpteen judgments in pre-GST regime which says that delegated legislation cannot surpass the main legislation. JK Synthetics, Indian Carbon, there are Supreme Court rulings which give you support in taking these arguments. Apart from this, if someone may give attention to the rule-making power which has been given under Section 164, there also it is very clearly mentioned that the government is empowered to make rules for carrying out the provisions of this Act. Nowhere in the CGST Act you will find any provision which allows the recovery or demand of the wrongly transition credit. Section 140 is the section which allows you to transition the credit. Nowhere it is mentioned in that section 40 or anywhere wherever the transitional provisions are there that you are, in case any ineligible credit has been transitioned, you can recover. So unless until you have a provision in Act, how can the government initiate the recovery proceedings or demand proceedings by imbibing one rule in the provisions? So another argument which can be taken over here is that Rule 121 is ultra vires Section 164 also. So unless until there is a provision in law which allows you to prescribe a manner of recovery, you cannot straight away go to the rules and start making provisions for such recoveries. Coming to the second part of it, one is tax itself is not recovered because of these reasons. Even without prejudice to this argument, again, if I go back to Rule 121, it nowhere even talks about the recovery of the taxes, of the interest. It only talks about the initiation of proceeding under 73, 74. 73 and 74 is only for the demand of taxes. Yes, of course, when the show cause notices they come with the provisions of interest as per Section 50. But Rule 121 itself doesn't consider this as a part of demand. Again, going back to Rule 14 of CCR, it was clearly mentioned that you can recover the ineligible credit along with the interest. So this is a legal argument which if anyone wants to put forth, saying that Rule 121 is not having any support from the legislation, and therefore any ineligible transitional credit should not be recovered from me under the existing provision unless, of course, the government brings any change. So this is a litigation point that can be taken up in case anyone is being denied any ineligible transition credit. Next, again, this is another very common issue which we keep on facing when we deal with any jurisdictional audits, when we talk to any investigation agencies or your anti-evasion agencies. This is a very, very critical point which keeps on coming. Non-payment of your vendor invoices in 180 days. Very clearly, law has mentioned that in the Section 16.2, if you don't make any payment within 180 days, the ITC of the same should be disallowed. How? You have to pay this amount to the government along with the interest. Recently, there has been a change in the Rule 37, which is the subordinate rule for Section 16, saying that, which gives you the entire procedure, how you have to do the reversal. So we'll divide this discussion into two parts, the pre-amendment part and the post-amendment part. Under the pre-amendment part, Rule 37 had a language that wherever there is a non-payment on your part, then you can go for a proportionate reversal. So to the extent you make the payment, you can take the credit, and whatever amount of payment you have not made, that amount of credit you have to reverse. Now, in this particular provision, there was also a mention of Form GSTR 2, that this has to be reported in GSTR 2, etc. And therefore, only when you do this particular provision should be coming into play. One legal argument over here which can be taken is, in the pre-amendment scenario, is that since the GSTR 2 never came into being, this rule itself is defunct. It is null and void because you are contemplating a scenario which has never come into existence. And if I am not able to use that provision, if you have implied some machinery, some mechanism has been prescribed under the law, then if that mechanism has not been provided to me, how can you expect me to do this? So this is one legal argument wherever anyone is facing any dispute for this non-payment of credit. amount and the ITC is being denied, this is one argument that can be taken under the pre-amendment scenario. Now going to the post-amendment scenario. Okay, in the pre-amendment scenario, there are also situations that I have a contractual clause where my payment terms itself are beyond 180 days. It could be 240 days, it could be 200 days, etc. Here also the department is saying that whatever it may be, the law talks about 180 days, you have not made the payment in 180 days, therefore the credit should be denied. I'll draw your attention to these few rulings and there are some dictionary meanings also. We have to give some meaning and some essence to the word failure to pay. Failure to pay means something that was obligated but you did not pay. Once my contract never obligate or puts any mandate on me to make the payment within 180 days, how can it be considered as a failure to pay and so as to apply section 16 for the purpose of reversal? So this is one argument where the department, yes, is not agreeing on the face of it, but we feel it's a very valid argument which can take you through at a higher forum, and reversals would not be required because it's really not a failure to pay. It's an understanding, it's a commercial term between both the parties that they will pay after a certain period of time. Once that is agreed between the party, the question of failure won't arise, and therefore section 16(2) should not kick in. Now going to the post-amendment scenario. This amendment has been made with effect from 1st October 2022. Like I mentioned in the pre-amendment scenario, people were taking a plea that GSTR 2 was not in being, how can you expect us to do all this, and therefore Rule 37 is null and void, it should be defunct, it's invalid, etc. Government realized this glitch and they plugged the loophole, and therefore we have a new provision in place from 1st October 2022, which has cleaned the slate, removing the terms GSTR 2 and just restricting it to the reporting under GSTR 3B. So unfortunately, post-amendment scenario, this argument of validity of this rule can no more be taken. Another change that has happened over here is they have removed the mention of the proportionate reversal. So the question starts coming, does it mean that now I have to do the complete reversal? If we read the main section, again, what is the essence of this law? That you should not be allowed to take the credit of the amount that you have failed to pay. So failure can be partial, failure can be full. So just because this rule has been amended in such a fashion, while the department will come and ask the question and start asking you to reverse completely, even if a part of amount has not been paid, in our view, still the language of section 16 will support us to say that my availment should be allowed to the extent amount has been paid, and the reversal should only be to the extent I have failed to pay. That is the intention of law. And of course, to be very honest, at lower level department is not really going to be very, it's not going to agree with this and in consensus with us on this point. But at a higher forum, we are surely supposed to get a favorable view, because rules cannot surpass what the sections are saying, the statute is saying. And just because a rule has been omitted or earlier it was there doesn't mean that section never said this. So rules can always clarify what is there, it can expand the procedure, but something which is already coming out from the law is very much is in support. You can take the support from that section and still apply the same logic that to the extent I don't make the payment, I should be disallowed the credit only to that level, not the entire amount. Another amendment that was made in this rule was that earlier, the interest was very specifically mentioned that it has to be levied under section 51 and it was to be levied from the date of availment. Now this is omitted. So what happens? Do I have to pay it from the date of availment or what I have to, because simultaneously, if you all remember, there's an amendment in section 53 also. 51 is for the output tax, 53 is for the wrong availment of ITC. 53 has been amended to say that you need to pay the interest only if any ineligible credit has been utilized. I think that was to bring in alignment with the amendment in section 50, that even if in such a situation, first of all, can I say that till the duration of 180 days has passed, my credit was never ineligible. It was always eligible. It is only on that cutoff date or on occurrence of that event I got to know that, okay, the payment could not be made for whatever XYZ reasons, and now I have to make a reversal. So till 180 days, it is always eligible. Because there was a specific provision under law under previous regime, people had to pay, and there was also dispute that people were saying that it is not ineligible credit to that extent, even if the rules say so. People are disputing on this ground as well. But now it's an open playground for us. Clearly, till 180 days, it's an eligible credit. There is no need to reverse it. Now, after 180 days payment, completion of 180 days, what happens if you don't utilize? Can I say that section 53 will come into play only when because after 180 days it's become ineligible credit. But I still have a ground to say that till the time it is utilized, interest provisions will still not kick in. Therefore, even if 180 days have passed and I have not utilized, I have maintained sufficient balance, again, I can take a plea that till the time this amount is utilized, say for example on 200th day or 250th day, I utilize this credit. From that day, the interest provisions should come in. In between, there should not be any interest. So these are the arguments which can be taken before the authorities, because they read the law in literal sense. They don't get into the details, and it's just a normal phenomenon that they want to recover the taxes or the ineligible credits. So they will just stick to this point. 180 days have gone by. Now you have to pay the interest, etc. So we'll have to read it along with section 50 and give the meaning to both this provision. And if you have not utilized, you are not supposed to pay any interest. And we can have all the mechanisms being made around this to ensure that at least whenever you are utilizing, you make the right payments and interest, etc. are paid if there is a delay on the payment side. Another ticklish issue which all the DGGI is interested in these days is about the corporate guarantees. GST implications on corporate guarantee. There are two scenarios that we are facing these days. One, when the corporate guarantee was given under the pre-GST regime during the service tax era. And other, when it's given under the GST regime. So to start with the second scenario, because it's a current scenario, we all know, we all are juggling with the new law. So if you see, as the law it is worded on date, there is a clear-cut provision in law that if there is any supply between the related party or distinct persons, even if it is without consideration, it has to be taxed. Corporate guarantees, normally there is no consideration which is charged amongst the entities. So a related party may give a corporate guarantee to their sister concern. They may not charge. If they are charging, that's fine. Then the question of Schedule 1 won't arise. But if they are not charging, that's the place where the disputes start arising. Whether it is taxable or not, answer in its clear language of the law is yes. It is taxable. We don't have any room to say that these are not related parties or this is not a transaction. There is no supply. Supply is such a wide word to cover in itself any transaction that is happening between two related parties. So to argue that it is not taxable is going to be very, very difficult for anyone. And also with the kind of circulars and clarification which the government is being issuing, they would definitely not, they are not going to agree to it. However, if someone wants to take a stand, then you can take some references from income tax jurisprudence under transfer pricing, where they have mentioned that giving of corporate guarantee is nothing but a shareholder activity. Because my sister concern doesn't have a financial strength, they are not so strong that they can go and get a bank guarantee. So just to infuse capital, just to help them get funding, I have to give them this corporate guarantee. But yes, this has yet not been tested in any court of law, because for the first time we are seeing these things coming under GST law. But to try it out, there is a fair chance that we can get some relief at a higher forum to say that this doesn't even qualify as a supply. So that's the kind of an argument which has to be put forth, that it is not a supply per se. So the question of being with consideration, without consideration, falling under Schedule 1, etc. should not even come into consideration. One argument some people want to take is that it is an actionable claim. So giving a corporate guarantee is definitely not an actionable claim. Maybe at the time when there is a default of payment of debt and then someone has to, honor that debt, that situation can still be a situation of an actionable claim. So taking this plea is really not going to help anyone, because during discussions we get to see these types of arguments coming up. Just to touch upon that, this is not an area where we can get any kind of a relief. Another issue is a very critical issue regarding one is about the taxability, another is about the valuation. Like I said, there are some people who have decided some value that, some fee for the giving of the corporate guarantee has been decided. Now, various investigating authorities have different views on the valuation. We all know about the valuation provision. There is provision which talks about open market value. If you don't have an open market value, go for like kind goods. Then you have Rule 3031 for the residuary mechanism. One investigating authority says that I will go by the rate that the banks are charging for the bank guarantee. The other says that no, bank guarantee is different. Their rate would be different. You are a related party. This should not be the bank guarantee rate. So what we see is that authorities, department, they are also raising doubts, they are raising queries, but they also don't know the answer. So if you are moving in a direction, at least you should know, you should be able to tell me what is the right way of valuing it. If you go by the words of the law, nothing doing. We have seen cases where the value of the corporate guarantee has been settled as low as 0.40% of the loan value, and also as high as 3% of the value, which is somewhere not even near about the bank guarantee charges. So this is a kind of ambiguity with which the department is investigating our books, and they don't know the answer. We also don't know the answer. What is the best way of going for the valuation then? One is that blindly follow the bank guarantee rate. Whatever bank guarantee is, if in case a company has already taken a bank guarantee, at least it will give you some parallel to follow, which you can say that, see, the bank on the similar case is charging the particular rate, I am also following the same rate. If it is not accepted, then you can go for the safe harbor rules which are given under the transfer pricing. Talks about 1% of the guaranteed amount, which is accepted under the TP reports also. Otherwise, what is left with the assessees? You can always go for the independent valuers report. To the valuation. Of late, we have seen another issue that has started cropping up is regarding the time of supply. The department says that this is a continuous supply of service. You have given guarantee for 5 years, therefore you are continuously supplying for 5 years. I don't know where it is coming from, but if you see, giving of guarantee is a one-time activity. I give guarantee for once, maybe the term of the loan be 4 years, 5 years, 10 years, and at any point of time, if that has to be, encashed, it will be again encashed only once. Every year I don't charge any fee or I don't give guarantee. So this is the level of dispute the department is raising. That's where I talked about the scenario about the guarantees which are given under the pre-GST regime. Now department is saying that whatever corporate guarantees you have given under service tax regime, you pay GST on that in the GST regime also, because it is a continuous supply. To our mind, this is not a correct interpretation of law. It's an absurd interpretation, because it's a one-time activity unless until it's a renewal. Like various times you have seen the bank guarantees are for 2 years or maybe on annual basis. So if you're renewing it on a periodical basis, then you can say that every time I'm renewing, it's a new service. But if at a go I have given the guarantee for 5 years, already given, service over, time of supply over, it is not continuing. What is continuing is my promise, not the guarantee that I have given. So this is the kind of ground level dispute when we have started facing of late with various investigation agencies, and also, like I said, that which we were discussing in the morning, that different authorities have a different stand on same issues. So there is no consensus among the department people also that in this particular issue, this is what we should decide unanimously. So if I have multiple registration, in one state I'm arguing for one part and the other state I'm arguing from the other angle. So as an entity, it becomes so difficult for me to decide what stand I need to take. Based on the argument or based on the issues that are raised by the department, I have to change my submissions. Another part, again, this is very recent issues we have started facing when a lot of companies have recently gone into the listing. DGGIs of various locations, I think Gurgaon, Ahmedabad, Chandigarh, all of them have started investigating all these listing companies, those who have recently listed, that what are the credits or what are the GST compliances they are doing. One issue that has come up is regarding the denial of the IPO expenses. They say that this is an expense that you are doing for the transaction in securities. Securities is not taxable, so it is an exempt supply. Therefore, you do reversal under section 17.2, because 17.2 we have a specific mention about the transaction in securities under the valuation part of it. Just to have a understanding that when a company launches any IPO, broadly there are two mechanisms. Either they go for a fresh issue of shares, or the existing shareholders, they offload their shares and sell it to the new shareholder. So the dispute for the second part is not coming, because naturally when the shares are sold, it is a transaction between the shareholder, existing shareholder and the new shareholder. So to that extent, there is not a problem from the perspective of ITC, because whatever expense a company would be incurring will be proportionately distributed to those shareholders. The problem that the companies are facing is with respect to the fresh issue of shares. Expenses are very common: advertisement expenses, printing expenses, legal expenses, consultancy, due diligence, etc., etc. So many expenses people do. Now, if I simply see the provisions of section 16, very clearly worded that if I'm incurring any expense in the course or the furtherance of my business, I should be allowed to take the credit. Is this not an expense in my course of furtherance of business? What is issuance of share? I am raising capital. I am raising fund for my company. What is it? It is nothing but a finance activity, a financing activity. So how is it not relevant for my business? How is it not in the course of furtherance of my business? Also, if you go to the definition of business, there's a last clause which talks about the incidental activities. If you may say so that, it is not in your main line of business, it's an incidental activity. Without having funds, without having capital, I cannot run my business. So to that extent, this kind of a argument which is possible with the assessees is that in terms of section 16, it very much qualifies for the eligibility. We have case laws, we have jurisprudence by the European Court of Justice, which have clearly mentioned that raising or issuance of share capital is not provision of service. It is a financing activity. Therefore, this was mainly for the perspective of paying taxes on the outward. So therefore, no taxes to be required. And they correspondingly also allowed you to take the credit of the expenses which you do for these activities. So with this kind of an understanding, even if there is a dispute which is being raised by the department, we have a strong ground to argue that these are financing activities. Since the financing activity are part of my business, these are important for my business, and going by the pre-GST rulings in Coca-Cola and various judgments, that anything which has, even if it doesn't have a direct nexus with your mainline activity but is in the course and furtherance of your business, the credit should be allowed. Now, this should be allowed in the view of these judgments. To answer what the department is saying, that it is transaction in security and therefore even if it is not supply. So one argument what can be taken is that since it is not a supply of goods or service, it doesn't even qualify as exempt supply. The question of reversal doesn't arise in that case. And having said that, even without prejudice, if you want to argue that even if it is, you are saying it's an exempt supply, where is it falling? You are covering me under transaction in securities. So what is transaction in securities? Transaction in securities is intentionally understood as buying and selling of securities. Issuance of shares is not buying and selling. A fresh issue of shares is not buying and selling. Even if we go to the pre-GST regime, we had similar provisions of reversal for the trading in securities, where trading in securities was specifically exempt also. So intentionally, and even going by the understanding of business, in our view, issuance of shares should not be considered as transaction in securities. So this can also be very well argued to say that One, it is not a supply, doesn't qualify as exempt supply. Even if you say that no, we want to put you under transaction and security, because transaction securities is also exempt supply, is not a supply. But for the purpose of reversal, we have put it under this. I will not fall under this because I am not buying and selling security. I'm not talking about trading because there can be situations that it can be a one-time sale. So one-time sale is also trading. It's not necessary that you are doing it in a routine way. So if I'm not buying and selling, it should not be considered as transaction in securities, and therefore I'm completely out of this provision. And by virtue of section 16, I should be getting the full credit. And if time permits, do we have time? I just need 2 minutes. So just quickly want you to sensitize about this summon proceedings. I'm not getting into the details. What I want you to be wary of is that these days summon has become a routine matter for the department. Any information they want, they don't want to issue a normal notice, they simply issue summon because everyone gets scared. There's a provision in the notice that, if you don't abide by it, we'll start criminal proceedings, etc., etc. So we have seen people getting panicky, cold feet that, someone has come, what should I do, this and that. The first thing is very important, just see that it's coming from the proper officer or not. While we have seen the department has not been, very well educated, they are not issuing summons without having authorities. And be conscious of the fact that DGGI has a pan-India jurisdiction. So you are sitting in Delhi and you can get a notice from DGGI Mumbai. You need to go and, attend to it. So don't avoid these summons because they will give you certain reminders. And if you don't abide to that, then yes, of course, they have the powers to initiate criminal proceedings. They do it or not is at their discretion, but why to, go at that level? Whenever you are going, you can attend it personally or you can, authorize some representative. In our experience, we have seen both the cases. Sometimes the officers allow us to enter as a consultant or a representative of the authority of the client, and sometimes they don't let us. So you have to be very conscious of the fact that wherever you are going before the authorities, you have to be well prepared in mind that if the representative has not been allowed to enter the room, I should be able to handle the case. Don't completely rely on your consultant and your representative that, okay, he'll take care of the matter. Be very conscious about the facts, what they are asking. If you don't know the answer, please don't answer. Don't give wrong answers. They have power to take this as an evidence, and this can form the basis for issuing show cause notice or any proceedings against the assessee. You have right to silence, not necessary that anything that they are asking you, you need to answer. You can remain silent or you can bypass the question saying that I'm not the right person to answer it, or I may just go and check and come back to you if you allow me to do so. Just in case, out of coercion or out of suppression or out of pressure, they make you write statements. We have seen, assessees are being kept, put on hold at office till 1:30 in the night. I personally attended one summon proceeding where till 1:30 in the night I was at DGGI Mumbai office, and this person was sitting inside, and naturally a normal layman or a taxpayer gets little fidgety about the fact that why are they holding me back, etc. So whatever you are writing, be mentally prepared that because it's going to go against you or can be used as an evidence, think properly what you are saying, and once you are out of the proceeding, quickly jot down those points that you have given as a statement. Wherever you feel that any statement they have, coercively asked you to give, immediately you have the power to retract those statements. You can go back, write a mail that during the proceeding, this was recorded, should be read as this, without hurting their ego. We also have to be conscious of the fact we cannot say that, you forcibly asked me to write this, because they will very well play that, they will show that we gave you all the liberty to give the statement. It was on your own will that you're giving the statement. But everything is coercive, we all know. They create a kind of mental pressure. That person wants to come out of that situation, and he ends up giving any statement. So wherever you feel like, they have put words in my mouth and forced me to write something like this, keep a note of that. And why I'm saying this, that this happens at that point of time and we are cold feet, we don't remember these points. And no one tells you that how you have to handle these situations when you have to go inside single-handedly and handle this situation. Come back, write a mail to the relevant officers that during my proceedings I was in the office till so and so hours, and this was written. should be read like this, so as you put in on record that something that has been written has been inadvertently written, or by mistake you mentioned, and you are correcting that statement. Putting that on record will help you in future. And secondly, last thing, if in case any inquiry has been initiated on any third person statement, please remember you have right to cross-examine. You can always ask that person to be present, or ask that person to present the officers to present the basis on the information on the basis of which they have initiated this inquiry. This right is always with you. Of course, your legal counsels and your representatives will support you in how to go about it. But never think that someone else can always complain against me and anyone can give me a summon. So even officers, they don't just go by what anyone is saying. They have to look into the case. They also look into the facts. They do some research and they call you. But if there is a situation that they are not even looking into the facts and just calling you, this is a right that is available with you. So just short point I wanted to discuss that, whenever you're going for any investigation, while it is mainly for someone, but for any investigation, these things are very important that, you keep in mind that when you're going, these are the points should be on your tips of your fingers that I should not be doing this, or this is what I should be doing during the investigation. So with this, I end my session and I'm happy to take any questions. Yes, ma'am.
Rightly mentioned, a lot of things they do in a coercive manner, and they mention that it is voluntary, because I don't know, at 2 a.m. who will make the voluntary payment and then, again go for a litigation, or, so is there a right to call for video recording?
Ma'am, it is nowhere coded in law. What can be done in this case is that if you want, you can write to them, and to all our, we all know that we are not going to get it. In case anything is there which you really want to have it, then you can take support from the High Court to get the proceeding. But even High Courts don't interfere in these matters, saying that it's their internal proceedings. It is their discretion, they want to share it or not. So it's very difficult to say in black and white whether they will give it or not.
I read, some couple of Supreme Court decisions where at least, for criminal proceedings, especially in police stations, they have mentioned that, assessee has right for video recording. So similarly, I just wanted to check whether you have experienced that, or, exercise that right for any of your clients.
Not yet, but maybe criminal proceedings have a different, basis where these, provisions are made. This kind of investigation is being done under GST law, right? So there we have seen the court says that we can not even ask for the working papers. So we have seen an experience in past that if someone has applied to High Court for asking for the investigation papers, they say it's their internal material. We cannot force them to give. They want to give it voluntarily, they can give it, but we cannot direct them to give it. So I think under the GST law, such provisions have not been made, and where I think should be such, such guidelines or such instructions should be there, so as to say that even the officers should be conscious of the fact that if this provision is there and I am abusing my power, tomorrow if someone goes to the court or there is any instruction which allows them to get the recording, this can go against me. But as of now, nothing is there, and that's what they are taking advantage of.
Thank you.
Yes, sir. Yes, sir.
Corporate guarantee in service tax regime, because there was certain litigation. I just want to know any High Court or what is the status of those litigations in service tax scenario?
Sir, I think अभी तक तो corporate guarantee में for the related party, right, it is yet to be settled, because I think they are mainly going on the valuation part of it.
So any High Court decision or something, or still pending?
Not yet. Still it's pending. Yeah, it's pending.
So secondly, you touched upon, like you said, corporate guarantee for 5 years.
Yes, sir.
Or more than that period. But recently we received a notice where they have computed on monthly basis also, and they have levied the interest what all was there. So not a yearly base. They have got this in mind to just put it on monthly aspect.
On what amount, sir?
What all amount you show in your balance sheet? That should not
on
have
the
been
loan amount, on the
right,
guarantee amount.
on the guarantee amount.
So
They
that entire
computed
guarantee amount, and for which period they are saying a complete duration.
complete duration every year, and you need to compute on monthly basis.
That's what, sir, I said, that they are now moving from one time to a continuous supply, saying that it's a continuous supply you are
Right,
giving. So this is not a correct way of interpreting, and this can be challenged, that guarantee is a one-time activity that I give when I sign this agreement or an MOU within the related party. And just because it's continuing for a period of the loan doesn't mean that I'm giving guarantee every year. Guarantee has been given one time for a duration of 5 years, 6 years, whatever the case may be.
In fact, we have been issued the demand notice also.
Yes, sir, we have
where
seen
they
that.
right.
You're talking of the GST regime. We have seen the notices being issued for the pre-GST regime also.
Right.
The service tax.
And my second question is, what are the rights of an SSC in case they forcefully enter your premise? Maybe mostly they do it in the evening after 6 or 7, and though they don't share with the notice what they are carrying. I don't know what they have got in mind, and just they step in. Any rights for an SSC to intervene, because it becomes very difficult for us to stop them.
Yes, sir.
And they uses what all, I just don't want to. And
No, we know the ground level situation. It's very, very bad at the ground level. They really behave like as if they are some CBI officers and they are raiding some criminal, etc. See, you have right to ask for the letter basis which they give, they are having, whether they are having authorization or not. We know they don't give it. So to resolve this amicably, the best way is to, cooperate with them. As a taxpayer, if I have not done anything wrong, I'm a bona fide taxpayer. See, there can be issues at any company level. There can be interpretational issues. There can be clerical errors. So it doesn't mean that I have a criminal state of mind. There is no mens rea. Unless until, so I'll tell you, normally when DGGI come na, they come with an intelligence. They just don't come for a roving inquiry. They have some intelligence in their hand. So what is the best way to deal with them is that be very cordial with them, make them feel comfortable and tell them that we are here to cooperate with you. We are part of your system. We are nowhere evading any taxes, anything. You can just give us some guidance that, what is it exactly you are looking at. Because DGGI cannot just simply ask you, give me your register, give me this and that. They have some piece of information basis which they come. So we can, of course, I cannot force them because we know the position where they are sitting, they can use any kind of tantrums and, any tactics.
What I feel is these officers step in without having the full information, in fact. They are only being directed to visit that premise and to extract the information what they.
So that's where the skill sets would arise, that we have to sit with them and bring them onto the same table to tell, make them feel that, we are here to help you. You tell us what is exactly you want to see. We will provide you all the information. We are not denying the fact. We are not saying that we are running away, we will not help you. आप ऑडिट का नोटिस भेजते हो, हम रिप्लाई करते हैं ना. ऐसा तो नहीं है कि हम रिप्लाई नहीं करते, थोड़ा टाइम लग जाता है, कभी और चीज़ें होती है, वी आर स्टक अप विद समथिंग. यू गिव अस अ लॉन्ड्री लिस्ट, 40 पेज का ऑडिट चेकलिस्ट दे देते हो, जिसमें से मोस्ट ऑफ द थिंग्स डजंट इवन अप्लाई टू मी. तो इसमें यू हैव टू बी वेरी एमिकेबल विद देम, बी कॉर्डियल विद देम, मेक देम फील कंफर्टेबल. Slowly, once they sense that, okay, this taxpayer is not of that nature. See, they come with all that arrogance and that, attitude that we are here to raid you and no one can move from here and there. You make them feel no one is going anywhere. We are here to help you. We'll give you all the information, whatever is available with us. Anything which is not available with us, give us time, we'll provide that also to you. Once they are trained in this fashion, they can sense that if the taxpayer has done something wrong or not. And like I said, if they are coming on based on some intelligence, surely there is some issue. If they are coming just like that, your body language itself would suggest that, they won't find anything. Let them do their work, give them all the documents that they want. Then slowly you can, ask them, sir, what is the issue? If you can guide me, help me, I can exactly to the same point, I can give you the relevant information. You start asking everything, anything, my people may not be there. Quite possible 6 o'clock के बाद some accountant has left. ठीक है, तो अब वो नहीं है तो क्या आप मेरे पे बोलोगे कि नहीं आप निकालो, उसको फ़ोन करके बुलाओ, ये सब वो सब. डिफ़िकल्ट होता है सर, ग्राउंड लेवल पे जब ये इस तरह की इन्वेस्टिगेशंस करते हैं बहुत डिफ़िकल्ट होता है. वहीं पे वी हैव टू कीप आवर कूल ऑफ माइंड एंड मेक देम कंफर्टेबल एंड गेट देयर कॉन्फिडेंस कि अगर हमसे कोई गलती हुई भी होगी तो हम कर देंगे, हम मना नहीं कर रहे हैं, वी आर टैक्स पेइंग सिटीजन्स, वी आर सिटिंग इन सच अ बिग स्ट्रक्चर, वी आर नॉट गोइंग टू रन अवे एनीवेयर. अगर कोई गलती की है तो ठीक है, हो सकता है हो गई हो, कोई इंटरप्रिटेशन इशू हुआ हो, किसी से गलती हो गई हो, कोई ग्लिच हो गया हो, आप निकाल दो, कोई डिमांड होगी, कुछ होगी, शो कॉज इशू कर दो, पे करना होगा कर देंगे, नहीं करना होगा तो लड़ेंगे. So that is just, you know, that mahol that they create to make you feel like you are the biggest criminal on this earth. So I think वो थोड़ा सा mental game होता है. वहीं पे we have to be very smart to make them feel कि हमने सब पे किया है, आप बताओ क्या चाहिए, हम आपको दे देते हैं. थोड़ी देर बाद सर they will also tone down. So जब उनको लगेगा कि कुछ नहीं मिल रहा है, ये तो या तो कुछ है तो वो पूछेगा डायरेक्टली आपसे आके कि ये चीज़ें निकालो, इस चीज़ पे मुझे देखना है. और उसमें अगर हमारे कोई आर्ग्यूमेंट्स है, कुछ है, डिस्कशन पॉइंट्स है, करेंगे बैठ के, मना नहीं कर रहे हैं. बट ये इट्स देयर स्टाइल ऑफ हैंडलिंग, जस्ट टू क्रिएट दैट फियर इन माइंड ऑफ द टैक्स पेयर दैट डोंट टेक अस लाइटली. एनीवन एल्स? थैंक यू फॉर हियरिंग मी पेशेंटली. थैंक यू सो मच.